All right, now let's get a check on the markets right here in Nigeria and other markets we track in the global space there. Great to have you, Will. Final trading day,
yes,
2024, tomorrow.
Penultimate trading day today, final trading day tomorrow. We're keeping our eyes peeled on what the market has for us.
Right.
And it's already looking very good. Santa is here with early kicks. Oh, yeah, Santa,
for Nigeria.
Yeah, Santa really, that Santa rally we expected. We did see that Santa rally, and we're hoping that, we kick off the new year, with those, positive.
We'll definitely be looking out for that. Maybe a new level for the OSHA index.
Of course. We're already at 103 at the time I checked, 103,000 level. I hope we get, past that, that resistance. I think we just when we get to 102, 103, we go back. But I hope we cross that, and then we'll see new heights for the NGX, especially we have this new resistance. So we're just going to be looking at what's happening in major equities that we track at intraday. In Africa, we're seeing major stock markets were in the red at intraday, except for Nigeria's NGX, which was the outlier. It was up 0.85%. That's at the time I checked, and we've seen that surge for the NDX. There we're at 103,000 points. And we look at South Africa, seeing it in red territory at intraday, 0.25%. I'm hoping that we see a turnaround before the close of business. Now, looking at elsewhere in Nigeria, Egypt's EGX, we see it in the red zone, 0.86%, and we see Kenya on Friday closing up 0.51%. But we're just going to be looking at what's happening in Nigeria's stock market. Now let's take a quick tour of what has happened, the highlights. This is the penultimate trading day for all markets before the new year, and we would like to take stock of how the NGX has fared in 2024 and what prospects it holds for investors in 2025. And to have this short conversation, we're going to be bringing on Professor Uche Waleke. Is joining us from our Abuja studio. Professor Waleke, good afternoon. It's good to have you on the program. Professor Waleke, we're seeing a whole lot happening with the NGX right now. We're seeing that if you look at the screen behind me, we're seeing the NGX, can project that. We see the NGX surging. First of all, we see that in the first half of the year, we're seeing it at 33.81%. And now we're seeing it at year to date is about at the 36% levels. And we did have, one of the things that boosted that performance. We see new listings. We saw Ardell come on board, and that boosted the NGX All-Share Index. We also saw it crossing that 100,000 points level that's been sticking at 99, sticking at 96, 93, 94. And we've seen that crossing and maintaining that 100,000 level. For you, what do you think? Well, looking at the performance so far, Prof, is this what you projected for 2024 at the start of the year? And have we hit that target that you have for the NGX?
Yeah. Thanks so much, Will. Let me start by saying compliments of the season and Happy New Year to you and Ladi in advance. Of course, what has happened shows the resilience of our markets. If you recall, the markets began on an optimistic note in January. Year-to-date return as at end of January was 36.9%. Today we're having about the same year-to-date return. By December, 36%. And this has happened despite all odds. This has happened against economic, headwinds, against rising inflation, against rising interest rate environment, and also exchange rate volatility. So, as I said earlier on, it speaks to the resilience. But if you recall too, I had written on January 1st this year, I wrote an article titled Crystal Gazing the Nigerian Capital Market in 2024, where I said that the market will still be positive, but of course there would be a pullback. Recall that the markets ended last year at a very high 45.9% return, year-to-date return, and that was the I think number one in the world. So, and I predicted that yes, while it will still be positive, but there will be we are not likely to get to that level, and that's precisely what has happened. Now we also note that in the primary market, for example, what actually turbocharged that segment of the market, you can attribute to the recapitalization exercise regulatory induced by the Central Bank of Nigeria. So we saw some traction in the primary market on account of the, recapitalization. Outside of that, we didn't really see, a flurry of IPOs as one, would have expected. And of course, in the bonds market, we saw the government also, taking dominance. The FG, came to the market a couple of times, including even issuing domestic, dollar bonds. We've also seen one or two states also coming to the market. So largely, I would say the market, has done well in 2024. The biggest dip we saw was in May. If you recall, it was in May when the market tanked. When I say the market, now I'm referring to the equity segment of the market, tanked by 6%, minus 6%. That was the highest we had, and that was on the back of, if you recall, the announcement then on banking sector recapitalization. Banking stocks went down, and even as we speak, they have not fully recovered, because banking sector returns on the average, year to date is still below, still underwater. In other words, still below the average of 36.6 or so that we have, because banking sector return is just around 21%. Okay, but we've seen some stocks, sectors to outperform this average, this all-share index. Talking about the oil and gas sector, for example, where we are recording performance as high as 159% year-to-date return in the oil and gas sector, buoyed by the likes of Seplat, MRS, Owando, Total, okay? And that's not unconnected with, again, what has happened in the oil sector, particularly the favorable oil price that we have witnessed, for much of the year. So overall, I would say the market, yes, performed well last or in the outgoing year, and we can also say it's reflective of even the GDP growth number that National Bureau of Statistics has been releasing. If you read the last one released, it spoke about the financial services sector, growing by over 30%. So the financial service sector has been the sector actually powering, including, powering growth in the country, and to a large extent, the stock market, has been reflecting that, because it's also been witnessing positive growth rate. Today, year-to-date return is above inflation rate. Inflation rate of 34.6%. Returns on the capital market today are positive. In other words, real rate of returns are positive, higher than inflation rate, and that's about one of the few sectors, one of the few markets you can have returns that are giving you real positive rate of returns. Many others are, negative. Okay,
Prof, you mentioned the oil and gas sector in terms of the sectors that boosted the NGX this year. What about the underdogs, the penny stocks that have, we have Julie PLC, we have NEM, we have some stocks that actually moved the market they're not like the big giants in the market, but have seen phenomenal growth in terms of their value, their share price. What would you say triggered the price movements in those stocks?
Their fundamentals, basically, of course, savvy investors would always look out for market fundamentals. So for penny stocks generally, particularly we find a number of them in the insurance sector. Look at that sector, for example, where you also have a number of penny stocks. What has happened? The insurance sector too has by far outperformed the markets, okay? If you look at the year-to-date return for the insurance sector, it's over 100%, whereas the all-share index is doing 36. Insurance is doing over 100. Again, that tells you that for penny stocks, there are potentials, and what really matters, are the fundamentals of those companies, and that is what, if you like, investors are seeking alpha, in those stocks.
Prof, I just want to highlight, we talked about, I mentioned earlier about the coming on board of Aradel, and that boosted the NGX in terms of the capital appreciation, the market capitalization. But we did see also the exit of some companies. Right now, currently, I think we have about 153 companies listed on the NGX. And as we rightly know, there are many eligible companies that are not listed on the NGX. Are there regulatory or policies that are restraining these companies from coming on board? Because we want to look ahead into 2025 and want to see how we can boost the NGX in terms of the number of companies that are listed on them.
Yeah, you're very correct there. And that's actually something of concern, that in a country like Nigeria, one of the biggest economies in Africa, with the number of companies that we have, just 153 companies are listed on the main bourse. Just as remember, even at the beginning of this year, there were 155. Today, 153 companies. You compare that with South Africa, for example. Johannesburg Stock Exchange has 274 companies, that are listed, and that also, of course, rubs off on the contribution of the market itself to GDP. If you look at equities contribution to GDP in South Africa, is close to $1 trillion. Over here, we are saying that it's even less than 20% of GDP. In South Africa, is 300 times 300% of the GDP. So it's very important that we have policies that are geared towards attracting or luring, if you like, companies to the market and to be listed. There are many advantages of listing, especially looking at it from a broader perspective, the macro level. One of which is even this issue of government revenue. If we have more companies listed, there's a likelihood that the government will also get more tax. Excuse me, excuse me, more revenues from companies' income tax. Okay, so the advantages are there, no doubt, and you can't. We can't. Sorry
about that, Prof.
Wish that companies get listed.
Prof, I don't know if you can continue the conversation. As in, just want to talk about what I'm talking about. The tax you just mentioned. Now, we know that the proposed tax reforms. Some are saying, some experts are of the opinion that it's an elixir to this capital market, to the stock market. I mean, to the capital market in general. Looking into 2025, just your own opinion. I know you're strongly for the proposed tax reforms. Do you see this being a boost for the market, or do you see it hindering the advancement, especially now that we just have about 5 million, let's say roughly 5 million Nigerians who are actively participating, local investors in the stock market? Do we see it being a boost and, having that ease on disposable income for Nigerians so that they're able to come into the stock market, save, and probably, invest? Do you see these tax reforms being an elixir for the market?
Oh, yes, Wills, there's no doubt about it. I am confident that the reforms will go a long way to, boost capital market, particularly the participation of retail investors, okay? It's a situation in which you have a reform that will help, Nigerians save. Low-income Nigerians save more money, okay? With the what is being proposed now with respect to personal income tax, the persons earning below 800,000 naira will no longer pay tax. What currently obtains is those earning, if you're earning 300,000, for example, the first 300,000 is taxed at 7%. But the proposal says if you're earning less than 800,000, you don't pay tax. So that can translate to a savings of as much as 80,000 naira, in a year. So we expect that low-income earners will save, and as they save, some of those savings will, filter into, investments in capital market investments in mutual funds, for example, where participation in mutual funds is still fewer than 1 million in a country of over 200 million people. So we expect that the tax reforms will boost the retail side of the market, the retail base of the market. And also talking about companies, we also look at what is also there in the reforms, tax reforms, the idea of reducing companies' income tax between now and 2030 from current 30% to 25%. for large companies. Okay, and of course, for small companies that have turnover of less than 50 million, and those companies too are not going to pay tax. So all of that will help to, of course, boost bottom lines of companies and help small companies to grow. When you reduce the corporate income tax that companies pay, for example, it is going to rub off, of course, on their shareholders' wealth, and the valuation of those companies. So ultimately, I want to argue, that tax reforms, as currently being packaged, will go a long way to boost activities in the market, going forward.
So how do you see, what is your projection, apart from the tax reforms, what do you see for the NGX for 2025? What's your outlook for the market?
Yes, I want to see a market, of course, a better better performance, generally, on the back of my optimism that the macroeconomy will, stabilize further. I want to see lower inflation rates in 2025. The budget is targeting 15%, even though that may appear ambitious and unrealistic. But I have no doubt in my mind that inflation is likely to moderate, downwards from the high, elevated, number that we have at the moment. So we have moderated inflation. Once we begin to see this inflation happening, and once the central bank begins to pause interest rate hikes, and also we begin to see some stability in exchange rates, and again, if the international oil price, is stabilized, and we'll also begin to see a ramp up in crude oil production. The budget is projecting 2.06 million barrels per day. Even if we don't get to that, but we have improved the, improvements in crude oil production. All of that will combine to, bring about an environment where, the capital markets will, will flourish, particularly with respect to, not only issuers, but even the investors themselves. Okay, issuers will be in a position to, come to the market to issue. Okay, knowing full well that, of course, when they come, they will get results, and it will also be a veritable source of, if you like, funds, even for the government. The government is budgeting 13 trillion naira, the deficit, and if you look at that proposal, the bulk of that is going to come from, loans in terms of financing the deficit. It's just 312 billion that will be from privatization proceeds.
Okay.
Okay. 9.3 trillion of that is going to be from loans, and all of that, one expects much of that will come from the domestic market.
Definitely.
And so I think
Definitely,
that
Prof.
in 2025 the market will be more vibrant than it is in 2024.
Yes, we look forward to a vibrant stock market, and we do know that the former DG of the stock exchange, Ndie Okereke, did say that the government should look to sourcing the funding from the stock market. So that's one big advice for the government there, to look to the stock market to see the listings of some corporates or some organizations like the NNPCL to be able to boost and drive the economy. Thank you so much, Professor Waleke, Professor of Director of Institutes of Capital Markets, Natarawa State University. Thank you so much for coming on the program.
My pleasure, Wells. Thank you so much for inviting me.